Actually just tell you one thing, whether there's liquidity or not. You have to decide. You have to come to a point on your charts where you decide, and I just waited for Wednesday because that's when most of the news are, and I don't need to trade anytime before that. Okay, hi everyone and welcome to today's video. So I'm just gonna do a journal read through of what I've drawn so far and what has played out. So this is usually the conversation I have with myself alone when I'm backtesting or just journaling. Okay, so July, right now it's the first week of the third quarter of the year. So usually I try my best to wait until the second or third week before I place any full risk on trades, meaning 1%. So if it's week 1 or week 4 of the month, I tend to just risk 0.5 if there's an opportunity, but I wouldn't stress myself over it. Okay, so July, we'll start off with EU, GU, and DXY. So currently, I am unable to pick which market I want to trade on until I see something in these 3 charts together. So for example, on the weekly, I have marked out quarter 2's highs and lows. So while DXY and EU are inversely correlated, which means they are following the plan of each other, GU is currently nearer to its Q2 high than its Q2 low. So here we have DXY. So DXY is like the main dollar that I look at that produces the most of my analysis. Most of them are based upon DXY before I look at something else. Okay, so I'm still trying my best to put it into words because I want to simplify it for the Joyce out there, 21 years old, who is finding it hard to understand market jargons. Okay, so Q4 is this blue color box right there, and I've marked out this one as its lowest point. And for Q1, from January all the way to April, this is the lowest point. So you can see that low and then higher low. So EU should be inversely correlated, which means it should be a higher high and then a higher low. And you can see that British pound is not following this pattern where it created a lower high and then a higher high. Okay, so to me right now, GU is a bit more problematic, which means I want to trade it more, not that I'm trying to avoid it, okay? Because the market is manipulated, right? So I'm trying to find where it's playing around with, where is it not following. All right, so I've marked out Q high, Q2 high and low with the money sign over here, which means that ultimately I think that price wants to reach for this. And then for dollar, it's reaching for the one above. And lastly, for British pound, it is nearer to Q1's high than all the other assets that are nearer to Q2's low and Q2's high, inversely correlated. Okay, so we have Q2 high and then Q2's low. So I marked out the entire thing and pull out its 50% level, the entire range, 50% level. It's closer to the premium of British pound, and this is the discount area. Okay, so I'm thinking that price will just reach for this 50% area. Okay, so now after the weekly, we'll go into the daily. Okay, so DXY is retracing lower into first previous week's low, while EU has already taken out 2 previous week's high, okay, going for the second, and GU is moving towards its first previous week's high. All right, so right now DXY is pushing towards this previous week's low, and the second previous week low is below, while EU has already taken out the previous week's high, going for the second. And lastly, we have GU not taking out any previous week's high yet. It's more looking like DXY right now. So between US dollar, EU and British pound, GU, which is British pound and the US dollar are looking more in sync. Whereas you look at the weekly chart, it was EU and DXY. So keep going down. We're going to go to 4 hours now. So here is another chart on the daily time frame. I've marked out the last dealing range and both sides have divergence. And this is also liquidity, which I realized all previous weeks high and low has. And I found out these pink arrows here. So here's a divergence, another divergence, and then the bottom as well. So if you see it in a range, it's from here to here, and then here to here for EU, and for British pound, it's here, up here, and right here. So these are the divergences that I found, and they also match with previous week's high and lows. So that's just like me realizing that two ICT concepts actually come together. So even though he can be teaching you a lot of different names for different things, they actually just tell you one thing, whether there's liquidity or not, whether price wants to reach there or not, basically. Okay, so on H4, this is my expectations for the upcoming week. So a lot of times you have to decide, you have to come to a point on your charts where you decide and then take responsibility of whether it's going to be a correct trade or wrong. But either way, you know, you'll learn something when you actually put your mind out there and say that this is what I want to see. Okay, so for me, US dollar, I wanted it to come all the way down here. Whether it takes out the previous week's low or not, I don't mind. I just want to spot, you know, one of these pink arrow patterns when it comes to this area. And I think the latest point that I'll reach for is new week opening gap. But let's say if price comes a bit lower, I might then draw out new PD arrays over here. So for now, I'm just marking out 2 or 3. Okay, so this goes for EU as well and British pound. So I think that both of them will push higher before dropping down into this money sign. So the reason why I say it might take weeks to get there is because this is the entire quarter 2's low. It might take the whole of quarter 3, which is 3 whole months, before it reach for this area. But I just want to mark it out as a target if price tries to, you know, reverse from here. Yeah. Okay, but it was only Monday, so that was all the data that I had. So now let's go into Wednesday. Okay, so here's an update. So when I came back to the charts on Wednesday, 2 whole days has passed, and you can see that the price levels were still around the same area. So I did not open my charts on Tuesday, right? And I just waited for Wednesday because that's when most of the news are, and I don't need to trade anytime before that, since this is where, you know, the money is going to be sitting on, right? So you can see that price already came back to the same area as if nothing happened, right? As if all of this didn't happen. So for someone who wants to take a bit more trades, if you know that it's going to be a lull day, maybe use a consolidating method, which this is what you see price at on New York session. Come back the next day, right? Maybe London or something, and then just buy or sell back into that price level. You just expect it to come back to that area. But this is kind of degen, right? I stopped doing that because you also tend to lose a bit more money when you're wrong. So I try to keep my trades very minimal, and I just choose the best ones. And once in a while, I would just like play around with this and see, oh yeah, price came back, this is nice, just to make myself feel good. So here you can see for EU, it's only a few pips away. And then for GU, price have already taken out previous week's high. So as you can see, we have Monday for EU already taking out both of these 2 highs. And then on Wednesday, GU just started taking out its first previous week's high. So this is when I know, okay, now I'll go into GU and see whether I can buy into the next previous week's high, since EU already showed me its hand, right? And DXY is just lagging, but we know that liquidity is there. You have to build this faith over time that you know, okay, money is sitting right there. Okay, so this was the trade. I risked 0.5% for this instead of 1%. Okay, so, oh, and this is so beautiful because you can see that GU is reaching for the previous week's high already. This is what I mean by ICT's like strategies blending together. While it's reaching for this previous week's high, it was also reaching for Euro's new week opening gap 50%. If you watch his stuff, you know that the 50% counts. I'm not just making this up. And lastly, we have US dollar reaching for its previous week's low. So all this, are like different names, but they still mean the same thing, like liquidity. When price starts moving, it's all going to reach for its own set of PDArray by its own last range of movement. Okay, so right. So the moment it hit TP, I just didn't want to take another trade anymore. I thought that I would be trading after 9:30 after the news released, but I realized that there's nothing much for me to do. Okay, so this was 10:46. From the previous chart, it was 9:30. So for that 1 hour and 15 minutes, I was not doing anything, and I decided to, print screen this recording of where I decide to stop watching the market. So you can see after the TP over here, price continued pushing higher, and that was when I started drawing out all these higher PD arrays, H4 bearish fair value gap, we have daily bearish fair value gap, and a daily wick of 50%, as well as equilibrium. I've drawn out the equilibrium for US dollar. Okay, so over here, I was also trying to spot the pink arrows that I drawn out, which is divergence, but I couldn't spot any. So this was already 10:59, and I decided, okay, there's nothing else for me to do today. See, still nothing, no divergence that I want to see, and no momentum in price anymore. And then I recorded, news is done for the day, and tomorrow is 4th of July on an NFP week. So I can wait until Friday now. Alright, so currently it's 11:02 a.m. in New York, and this is what I've seen so far. So I didn't take any trade, but I just wanted to show you guys like how accurate the values actually are when it comes to choosing out the PD array and how price actually respond to it. So when price decided to push further, I started drawing out the next few PD arrays. For US dollar, it's the equilibrium and then the new week opening gap. For euro, it was this swing high, new week opening gap, and 75% of the entire range here, as well as this daily fair value gap. If you can see from this low of this green candle all the way to this low of this candle, there's a fair value gap here, and it's also in line with this entire wicks. It's covering it, right? So when you look at the midpoint, if I just show you this daily FEG, this line is actually the midpoint of it, and this 50% of this wick is right here. Okay, so take note of this level as well. And lastly, also the H4 fair value gap on the British pound. So this is on the daily time frame. I'll go into the 4 hour, and you can see where I got this fair value gap from, and this is specifically an overlapping fair value gap. So here I marked out the points, but I drag it a bit forward to see this overlapping fair value gap. And on euro, this is how it looks like. You can already see how price is reacting with its bodies, the candle bodies. Okay, so you can see that none of the candle bodies are closed above this midpoint as well as the wick. And then here's the equilibrium. It's just reversing like that. And lastly, this is the H4 bearish fair value gap. So all of these are different PD arrays, right? But they are each of the assets closest PD array in the direction of co-inverse relationship between USD, Euro, and British Pound. Right, so the first week of July, the first week of Q3 have already played out. And so far, it have shown us that it wants to push lower for DXY, Euro, and British Pound pushing higher. And as price moves along, I would then draw out the PD arrays that are in each of its price dealing range, whether it's discount or premium, to see what market may be attracted to and how and where it might react. So you mix that PD array, that price point, with the time of day, whether it's related to news or which trading session it is, then you will find, potential divergence that I've marked out, like all these examples, right? Where the turning point are in the market. So each time it has turned, this have now become the new set of liquidity. So this was the last divergence pushing higher. I was expecting it to push higher. And then this last divergence that pushed it lower, and over here, lower, right? So this have become the liquidity for the DXY. And therefore we see it taking it out. And the next one I can see so far would then be this Q2 low, the Q2 high for Euro and British Pound. British Pound is already reaching into Q2's high a bit faster. So let's say if it reaches there next week, while Euro fall short, so it just hang around here, and then DXY just shows us like taking out this low and not going any lower and start to show, pattern of reversal. Then I would go into the lower time frame and find something that would catch this divergence trade. Alright, so this is how I usually look at my charts using ICT concepts as well as quarterly theory. Whatever that I'm putting out here does not represent everything that ICT or everything that Trader Daye is teaching. I'm just, a little sponge that's picking up whatever that suits me the best. So I hope that this video can actually maybe spark some curiosity for ICT stuff, for you to dig a bit deeper into his theories and pick and choose what works well for you. So thank you for watching. I'll see you guys in the next video. I'll update as the market prints more candle. So make sure to subscribe and leave a comment if you have any questions.